Hey traders, Raghee here, and in this recap video I'm going to cover the Australian dollar versus US dollar, which, by the way, I want to make sure everyone knows that if you are trading the futures, it's the ADZ, it's December futures contract for the Aussie dollar. So, whichever way you want to trade this currency pair, either through the Forex or the futures, it's the same setup. So what I'm going to talk about here is the trade that we took last week, which was the short, and then a guidance trade component, which is hopefully going to be what takes us down towards our initial profit target down at the 75.55 level. Now, we've been looking to play the 76 level. The Aussie US was basically an entry from where we sit right now. I could have been more conservative and gone with an entry up around the 76.80 area. Sorry, not 76.80, 76.20 area. But rather than 76.24, we went ahead and looked at a zone, which I will oftentimes do around double zeros. So I have a double zero, 76.00 in play, which means I can go down to 95, but I can also go up to 15. So really, you can split it, and what I call, you can go with a half-half here. But either way, we are absolutely short from this area, and that was from last week. Now, the market rallied up again earlier today, and a lot of traders got nervous about it, and I said, well, if the daily candle is unnerving, try to dissect it. And this is a technique to keep you from getting shaken out of trades. You dissect the daily. And that means you understand that the daily can be this big lifeless candle, and it can look very daunting when it's moving against you. But there's a couple things you can do. One, you can calculate the range extreme high for the day. Let me show you how that works. So I head on over to Auto Chartist. I grab the Aussie versus US, and I want to know what the daily price movement range for today is, which is about, what, 66, 65 pips. So I would take the daily candle, whenever I find it, I would grab the low, which is 75.92, and I add 66 to this. Well, you can see what our high was today. It's 76.44. Now, the range extreme would have landed us about 76.55, 76.58 to be specific, and that's on the high end. On the average, it's 60 pips, right? So rather than calculate the upper end of the price movement, you can calculate the average upper end, which would be 76.52. So between 52 and 58. Today's high, again, was 44. So if you're prepared mentally for that 58 to 52 high, and the market only goes to 44, this is when you can kind of calm down and say, all right, this market's very much moving within its very typical 68% probability price movement. Next, you dissect. In other words, where can you see if the market was going to start to lose support? Where could you see what I call the rollover? And earlier this morning, we started our chat at 8 a.m. Eastern, but earlier in the morning, at about 7:45, we started to roll over on the 5. Now, what do I mean roll over? This is not a futures terminology, but we literally are breaking the support of the 34 EMA on the low. We're literally breaking that support. So that kind of move here triggers the short as an intraday trader. I'm going to show you a trade that's setting up possibly to the long side in a couple markets here today in this recap video. So I can also see this on the 15. We can see that right here, the 9:45 candle. So this happened much, much later, but the rollover occurred, and it allows me to look at this daily and say, all right, how many 5-minute candles are inside this daily? I mean, think about it for a minute. If you think about 12 candles per hour, right, 24 hours per day, that's 288 5-minute candles, giving that nuance as to how the market's moving inside that daily. So this was a terrific follow-through for us, because what we ultimately got was a market that looked like it was not moving in our favor, rolled over, and has kind of landed now back at the zone from which we can manage our open trade. And that's that 76 area. So this, I believe, is moving in our favor. Now, we have a couple hot zones coming up with Powell tomorrow, the Fed chair nominee, I guess you would call him, and then Yellen, the outgoing Fed chair, going Tuesday and Wednesday. Now, let me show you another kind of reversal, and this is going into the Asian session, and I've got my eye on this one. Look at the way we rolled over on the Euro US, and now we have this downtrend on the 5-minute. So one of the trades I'm looking at into the Asian session is a potential break of the 119.05 level. And if we can get through that with a positive CCI, I'd like to get long on a 5-minute. Now, my expectations are also going to be based upon that price movement range I showed you. So if I get that move, so I'll want to get long, and what I'll do is say, okay, I'm not looking at the daily price movement ranges. I'm actually looking at the hourly. So if I can get a move during the Asian session of about 16 to maybe 22 pips, I'd be pretty darn happy on a 5-minute. But why so muted? Think about the time. This is when we're taking this trade. Okay, if this were this time, it'd be a little bit different. So know your time of day to know the difference. Okay, that's how you can prevent getting shaken out of trades. And that's also how you can manage trades that are moving against you without panic. I'll see you in the next update.